Welcome to this ET special broadcast. I'm Nayanthara Rai, working from home in New Delhi. And joining me today are two stalwarts from the financial services ecosystem. It doesn't get bigger than this, ladies and gentlemen. Joining me now is Vishal Kampani of JM, the top boss there, and Abhimanyu Munjal of Hero FinCorp to talk about what the RBI Governor Shaktikanta Das announced at 10 a.m. A slew of measures and announcements coming in the way for the financial system and the ecosystem at large. Thank you so much, Mr. Kampani and Mr. Munjal, for joining us here on ET Now. I'll come to you first, Vishal. How do you see the measures announced by Shaktikanta Das today? Would you say it's a bazooka? The governor fired a Brahmashastra, or are these incremental in nature?
No, I think today was a great day. We are very thankful as the NBFC sector to the governor. I think there is a big boost which has come today from the RBI, and a much required boost. Today is a great day, as I said. So we are very excited. I think all the measures that he has covered them very thoughtfully. He has addressed almost every segment, NBFCs, HFCs, small businesses, the real estate sector, and overall, it's very positive today, Nayanthara.
Okay, so that's the word coming in. Is the word coming in from Vishal Kampani that very positive in nature? Incidentally, ladies and gentlemen, both Abhimanyu Munjal as well as Vishal Kampani together on behalf of CII were also spearheading the segment for financial services and NBFCs at large. Abhimanyu Munjal, you got what? A loan book of 24,000 crore rupees after what the governor has announced. What's it going to mean for a player like you? You know, you may not have had liquidity issues, but the very fact that he's taking care of the small and medium NBFCs now, is that a game changer of sorts?
Yeah, I think, Nayanthara, I would like to echo what Vishal said. I think it's a bazooka. It's something which is extremely welcome. All the measures are very, very thoughtful. In fact, a lot of industry bodies like CII and others have been consulted before these measures come out. So there were a lot of representation regarding the TLTRO, NPA clarifications, and I'm very happy to see that most of the representations given by all industry bodies have come up, and they have gone live and executed the measures. So we are very happy. Both Vishal, me, and the CII NBFC committee are extremely happy. This will be very useful not only for the large NBFCs, but will actually give a breather to a lot of small and medium NBFCs. Now we have to wait and watch to see what is the definition of small and medium. Right? We are still going to wait for the fine print, and we are eagerly waiting for it. But this is a very thoughtful measures, very, very timely move which has come in by the governor. We really appreciate it.
So I think the consensus is there that this is a bazooka that has been announced by the RBI Governor Shaktikanta Das. Vishal Kampani, if I could come to you and ask you the same question I just asked Abhimanyu Munjal. You know, I know there has been a big concern when we talk about not just NBFCs, but corporate India at large. Corporates that don't have a rating higher than AA have been unable to access liquidity. Today, of course, the NBFCs in that sense has been addressed with that 50,000 crore rupee measure which the governor did announce. So is it a game changer according to you? And is this going to really be enough, or you think this is just the start? Because remember, let's not forget what the governor said. He said, we will start with 50,000 crore rupees.
That's right, Nantar. I think just to step back a bit, as you know, and I said earlier on my interview that we are in unprecedented times. And frankly, it's, as I said, it's hard to even estimate demand for a corporate over the next 2 to 3 months. So the statement that actually made me most happy today is when the governor said this is the beginning. And if things were to get worse on the coronavirus front, of course, I'm sure RBI will come with more measures, maybe even including direct measures to support both corporates and NBFCs further. And I think we expect that as an industry. And industry will deliver. We have to just survive over the next 12 months as an industry, all of us put together. And if we have the right support from the government and RBI, I'm sure that will happen.
Abhimanyu Munjal, that's exactly the point I wanted to come. This is just the start. And the Shaktikanta Das began the press conference by saying the RBI will do whatever it takes. So today you've seen a slew of announcements. You've also seen, as far as commercial real estate go, some concerns being addressed. But there remains a lot of pain when it comes to residential and home loans. So are you expecting anything on that front, or do you think that whatever has been announced today, as well as the 3-month moratorium earlier, should be more than enough to take care of the pain?
So, regarding the home loans, I think there has been extra funding which is given to NHB in the tune of 10,000 crores, which is definitely going to be extremely positive in creating liquidity for the housing finance companies, as well as clarification on exclusion of NPA during the moratorium time, which means for the end home loan consumer, they get relief of not being classified as NPA. So I think these are really good measures. Vishal is better placed to talk on the commercial real estate front, but I would feel we need in the future we may need measures like this for other sectors as well, not only the real estate sector.
Yes, of course. I think auto, for example, the pain in the auto sector also, of course, needs to be addressed. But Vishal, we haven't talked yet about the cut in the reverse repo rate, 3.75%. How crucial is that? What's going to be the impact of that? Do you want to break that down for our viewers, and is it enough?
Yeah, so again, that's a great move by RBI. And I think to keep it very simple, it basically pushes banks to lend. And what we have seen is that banks are using the LTRO funds and largely funding AAA credits, right? So in a sense, they're not really taking a lot of credit risk. And I would not even blame them in this environment, because it is a tough environment. It's unprecedented, and they would want to cover their bases as well. But what happens here is it pushes banks to bid more for the LTRO facility offered by RBI and not keep cash idle, which of course is a very positive thing, number one. Secondly, I think the capital markets borrowing in NBFCs is quite significant. So if you look at the maturities of total loans, NCDs and commercial papers of NBFCs in the next 3 to 4 months, the number is close to around 150,000 crores. And our primary research tells us that almost 50,000 crores of that repayment is in the form of market-linked instruments, which are NCDs and which are commercial papers. And because many of those institutions like mutual funds are facing redemptions, they will not be able to renew many of those facilities. So having support from the banking system for these NBFCs to be able to repay those papers is extremely critical. And therefore, the step again taken by RBI today is very timely, and as well as adjusting the repo rate to be able to push banks to lend is very timely. Now we have to watch carefully over the next 1 month, which is the timeline for this 50,000 crore LTRO as given by RBI. on how banks support the NBFC sector and how they lend across smaller and medium-sized NBFCs and not just the AAA NBFCs.
I want to expand on that point, Vishal. So let me come to Abhimanyu for this. I know that both of you together, as well as CII and many industry bodies, have been saying that there is this massive spread and distortion when it comes to any corporate or NBFC which has a rating below AA. But do we also not need to be cautious at this time that we also make sure that the NBFCs that are deserving of credit, that are deserving of this extra liquidity, actually get it? Do we have enough checks and balances on that front?
Yeah, so I feel, Nandara, it's, the targeted LTRO for NBFCs clearly says it's for investment grade papers. And it's prudent that, banks do their credit assessment as per their credit buying policies. But also we need to keep in mind, this is unprecedented times. We need to pump in liquidity across industry and not only to the AAA papers. So this move is very welcome from the RBI, but we still have to wait and watch how this is transmitted. Like you said, the risk still remains with the bank. The RBI is not taking the risk. So how well is this transmitted over the next month and going to the right hands is very important. It is extremely important that banks are prudent while doing this, but also they need to understand that these are not normal times. These are unprecedented times. And they need to support the NBFC sector, which are basically intermediaries, to reach out to the last mile. And like Vishal spoke, 30% of liabilities for NBFCs come from the debt capital market. My sense is about 1.5 lakh crores is coming to repayment in the next 3 to 4 months of this sum. So all of this needs to be taken care of. And that's why this 50,000 crores of TLTRO is very timely. And I am sincerely hoping that most banks transmit this to companies which are AAA and under. And, as the governor himself has acknowledged that the first TLTRO of 75,000 crores has majority gone to PSUs and AAA. So hopefully this should be a measure to transmit the measures that RBI has announced today.
Absolutely right. The ball is now in the bank's court, and I'm sure they will be nudged to make this measure a success. So Vishal, taking that point further, let's see when the banks transmit this and how all of this pans out. You brought a very crucial point about demand. We have seen particularly the private sector banks being a bit stubborn about not wanting to increase credit offtake. They've been nervous, obviously, about the rising NPAs, the very fact that their balance sheets could get unhealthy and all of that. But is there really demand for new credit? We've seen these measures that are coming in from the RBI, but the big question also remains is that which corporate is today going to go out and want credit? Where is the demand?
Yes, so that is a very good question, Nantara. And I think the current measures that are being taken by the Reserve Bank are, first of all, targeted at making sure the liquidity position of many of the corporates and NBFCs is intact. I don't think the focus here is to generate and go behind credit demand. And rightly so, in an environment where there is a lockdown, there is not going to be any credit demand. In an environment where we don't know if the lockdown will be further extended or not, it is very difficult to predict any form of industrial or consumer activity. And therefore, there is no question of trying to predict credit demand. But yes, currently the steps need to be taken to make sure there is ample amount of liquidity. And as I said earlier, very importantly, that the transmission of that liquidity happens across ratings and not just the top ratings.
Abhimanyu, do you want to come in on this point? We're going to have to see maybe simultaneous measures that New Delhi will have to announce to make sure that A, there will be demand, that has to be created, and all of this also at a time when there is such massive pressure on the entire ecosystem. You have the tough job of also making sure that collections are taking place, that is also healthy. At the same time, all this nudging as far as giving out credit goes. The big question is, where is the demand? Have we created enough liquidity to also make sure that a player like you is able to meet the collection timeline?
Yeah, so see, Nayantara, the measures that have come in are very comprehensive. They have covered SME, small business, through the SIDB refinancing. They've covered home loans through NHB refinancing or additional finance available to them. And they've also covered NABARD. So from a monetary perspective, I think these are very comprehensive measures to have enough liquidity with customers, with SMEs, with NBFCs, which is the need of the hour today, right? Today we are talking on survival, right? They are addressing how to survive. From a fiscal perspective, we are looking forward and eagerly waiting for a fiscal kind of package which can actually boost some of this consumption. And if you've probably noticed and seen that in countries like China, where we've seen now automotive demand really, spring back right after the opening up. And, that gives a lot of confidence to us in India and to Hero FinCorp that we will see our automotive financing spring up post the open up, and as well as good news, which is the monsoon. Today, the governor also mentioned, and that the monsoon has been good. So the rural demand should be springing up sooner than later. And I'm pretty optimistic about it.
Can I ask you, you actually genuinely believe, and that is the view in the Hero Group, that once the lockdown ends and I don't know whether there'll be a medical breakthrough, but the economy starts picking up, that you could see sales of, for example, two-wheelers come back?
So from a Hero FinCorp financing perspective, we believe that China is a good example, and we are getting ready for a recovery once things open up. And also we believe that there will be a lot of consumer shift from sharing transport to personal transport or public transport to personal transport. And I think Hero FinCorp is going to be very well placed to finance those customer needs for the entry segment vehicles, in which the majority of our financing of two-wheelers happen in that segment. So we are very closely looking at trends across the globe in China, and also monitoring stuff like the monsoon and the fiscal stimulus which was given earlier, which is 1,70,000 crores to the rural, to the masses, which would boost some kind of demand in the rural areas. And I'm pretty optimistic that this season, which is Diwali, should be good for Hero FinCorp in terms of financing two-wheelers.
Okay, inshallah, let's hope that is indeed the case. Vishal Kampani, coming back to you, this is about survival. We understand the Prime Minister has instructed his cabinet as well, and let's first concentrate on survival. Revival is the second part. And clearly the RBI's measures today were also about that, survival, particularly for the NBFCs. We spoke about reverse repo rate. I want to just quickly touch upon the very fact that, he's given some relaxation, the governor, when it comes to NPA recognition, the status on asset classification. I'm sure, Finance Minister was going to follow that up maybe by suspending certain sections of the Insolvency and Bankruptcy Code, something she's on record about and has promised will be coming soon. But what about LCR, that being cut to 80%? How crucial is that? What kind of an elbow room is that really going to provide to the financial ecosystem?
That again is a very positive tool, because it just allows the banks to access more of their reserves, right, which are parked for rainy days or for risky assets to actually be used for lending. So these are all very positive moves. And I think over the next few weeks, if times are going to be tougher, there will be more relaxations coming in so that banks can really support both the corporates and the NBFCs from a liquidity perspective. So again, LCR is a brilliant tool. Repo rate is a brilliant tool. TLTRO, again, an absolutely fantastic tool. And, I also believe that, there is always a question of moral hazard, right? So there have been There's been a lot of talk on, RBI directly financing, corporates or financing mutual funds. And there is always a question of moral hazard when you have a lot of backstops which are doled out by the government or doled out by RBI. And, one has to draw the line at some point. And I think right now, one has to focus on liquidity measures. The situation with COVID and coronavirus has to be watched on a daily basis. And I think we can always address the question whether we need not just further liquidity, but a lot of fiscal and sort of backstop measures to make sure that businesses don't default and don't go under. But that is something I'm sure the government and RBI will review on a constant basis. But again, I think the focus today over the next couple of weeks needs to be immensely on liquidity.
Absolutely. This is about liquidity. It has to be about survival. My producers are cueing me that we are running out of time. But before I do that, I want to end also on a positive note, on a slightly lighter note. So, gentlemen, if you will indulge me, I see that both of you are clean-shaven, working from home. I don't know if you did that specially for this interview, but we are asking all our big guests on the channel, how has work from home been for all of you? Is this your look normally, or is it an accepted thing now that if you're going to be on Zoom calls, you can be in pajamas, you don't have to be shaved? I don't know if you're getting haircuts from your wives or your moms. Vishal, you go first.
So I haven't had a haircut since the lockdown, and my haircut before the lockdown was a month before the lockdown. I will not venture and take the risk of having my wife or my daughter cut my hair right now. Yes, I have clean shaven for this interview, and I had not shaven for a couple of days before that. But work from home has been great. Thanks to tools like Zoom, like Microsoft Teams. We've been at it in our home offices for the last 3 weeks and 4 weeks. And at least at JM, there are a couple of businesses which have actually become more efficient, a lot more efficient. Bombay, as you know, has crazy travel times. And there are lots of divisions where people are reaching out to clients faster, more efficiently. I think we've hosted a tremendous number of meetings in terms of, video conference and audio conference meetings with a host of clients and institutional investors. So there are parts of the business which actually have become more efficient. But on the NBFC side, of course, collections, is obviously difficult. And there are some businesses and some aspects of business which you cannot do as work from home. So it's quite a mixed bag, but I'm looking forward to this opening up.
Abhimanyu, what about you? Did you shave especially for this interview? Have you got a haircut? How's work from home been? Is this going to be your new lifestyle?
So, Nayantara, I have not shaved, but thank you if I look clean shaven. Yes, I did venture and took the risk for my wife to cut my hair. And, it's worked well for me. Work from home, I think, has created a lot of work-life balance in my personal life and my team's personal life. We save a lot of time in travel. I used to spend an hour 10 minutes to go to office and back. And now I don't need to. Now I spend 10 steps to go down to my dedicated office, right? So I get to spend much more time with the family, eat meals with the family, yet be more efficient at work. I have realized that I'm doing longer hours on Zoom. Their meetings are more efficient since there's no one bothering you on the phone. Not only me, even the people that I'm doing meetings with. No parents calling, no kids calling, everyone is around. And the meetings start on time and end on time. So it's been really efficient for me. I think this is going to be a regular feature in my company. Maybe a Saturday work from home or twice a day work from home, which will help us reduce some OPEX and, get more of work-life balance for most of our employees, as well as get us more efficient. In terms of collections, like Vishal mentioned, we are trying the new norms, right? So we are trying digital collections where we have 5 million customers, and out of that, most of them are used to a very, hand-touch kind of collection because it's more rural. So we are seeing early success of digital collections, and I hope that, the positive from this would be, of course, work from home and probably a new collection system, which is more digital, which we can take post-lockdown as a new normal. But yeah, this will be one of my new normals to work from home.
Well, let's hope that you only get haircuts from your wife and you don't have to get one for your balance sheet. But with that, Vishal and Abhimanyu, thank you so much for taking the time out and joining us here. Doesn't get bigger than this. These two were in charge of giving recommendations from the CII to the government. A lot of those recommendations have indeed been accepted. Both of them of the view that this is indeed a Brahmashastra that has been fired by RBI Governor Shaktikanta Das. Thanks for watching.